Okay, we're going to kick off. Welcome. My name is Paul van Sale. I am one of the co-founders and the chief creative officer at The Conduit. Gillian Tete is going to run the proceedings. She requires no introduction, but I will say a word of introduction. Plays a very important role at the Financial Times, is the kind of brains behind the Moral Money column, and a very, very thoughtful commentator on all things that we care deeply about. So lovely to see you again. And I thought what I would do is just kick off, because tonight we're going to have a really very, very thoughtful panel talking about the role of the private sector and corporations at this very critical moment. And at The Conduit, we have sort of built a campaign or a way of thinking around this notion of build back better, and trying to ensure that when we are out of the kind of hot and most urgent part of the pandemic, we are able to rebuild a society that is both more sustainable and more just, critically speaking, and also thinks very carefully about how you achieve rapid system change at this particular moment. And I'm going to kind of double down on that idea for a moment and explain at least a way of thinking, because I think it might be useful to frame the conversation. I think it's fair to say at this wildly disruptive time, we are going to see pretty fundamental shifts in citizen behavior and consumer behavior. And we are likely, as citizens and consumers shift, we will see corresponding shifts in government and particularly in regulation, and also in the behavior of the corporate sector. And so I think if you're interested in a more sustainable and a more equitable planet, one of the things to be looking for is areas where you can use a fulcrum to achieve rapid change in areas that have very significant paybacks. And let me use just two areas by way of examples, and then hand over to Gillian. So I think the first is clean air. As we know, there are 7 million people a year who die. There are 7 million excess deaths as a result of polluted air. We now know that there's a rather strong correlation between excess mortality rates in particular areas and people who die of larger numbers of coronavirus and areas where you have polluted and dirty air. We also know the air quality has improved significantly. And that there therefore seems to me to be one of the best moments in human history to create a broad-based citizens campaign to campaign for a more urgent transition to a clean air economy by shutting down, for example, coal-fired power plants, by accelerating a move to electric vehicles, by banning the burning of biomass or subjecting that to greater and more stringent regulation. And to think about all the economic opportunity in that, but all the ways in which citizens and governments can help regulate and push towards a more rapid systemic shift towards clean air. If you follow that thread, there are tremendous both economic opportunities and opportunities for adjustments in corporate behavior along the way. The second might be in relation to the use of antibiotics in industrial farming. I think we now know that 70% of all antibiotics in the world are used in otherwise healthy animals. The overuse of antibiotics is what enables this highly proximate factory farming. It also creates the condition for the emergence of what may be the next pandemic, which is drug-resistant superbugs. And if you were to use this heightened consciousness in the world right now around the risk of pandemics and thereby increase the scrutiny of the use of antibiotics in factory farming, and if you removed or prohibited the use of antibiotics in the way that they had, you may in fact begin to unthread the economics of factory farming, which would have very significant climate consequences in ways that I think would be very beneficial and indeed indispensable if we are to hit our climate goals. So I think one of the things we should be thinking about is in what areas can you place pressure as a citizen, as a consumer, and therefore as a regulator, which will allow this moment to create systemic and rapid shifts, and so do bend the arc of justice towards the arc of history towards more just outcomes. So that's the frame. We're delighted to be able to present this session together with Gillian and the Financial Times. The Conduit has a very robust digital program right now. While we are all in lockdown, I'd encourage all of you to look at it and possibly subscribe. We've had over 140 events since we've been in lockdown mode with some very thoughtful people, as evidenced by tonight. And with that, I hand over to Gillian.
Well, thank you very much indeed, Paul. And I first of all want to thank you for setting up today's event, or this evening's event if you are in London, and also to salute all the work you're doing at Conduit to drive this agenda forward, which is very important. And the framework you're creating for Build Back Better is absolutely fascinating and worthy of a lot more discussion and debate. Now, just over a year ago, in fact, almost a year ago, the Financial Times created the Moral Money platform to try and sort of draw attention to what we saw then was a shift in the zeitgeist about business. If anyone's watching it and hasn't seen the Moral Money platform, it's a twice-weekly newsletter, which has also got a web page as well. So do sign up and look at what we're doing. This is what it looks like. But we did that because we thought there was a zeitgeist shift. And in the first, 9 months of our existence, we were writing a lot about all the efforts that business and finance was making to embrace environmental, social, and governance issues. When COVID-19 hit, I must admit that one of my first reactions was, well, are we going to basically look less relevant now? Is everybody in the corporate world and the financial sector going to be so consumed with trying to fight COVID that they won't have time to worry about ESG or regard it as a luxury? And in some ways, we don't yet know the full answer because we're still living through this terrible crisis. But what we've been very struck by in the last couple of months at Moral Money is that the engagement levels and the interest has risen quite sharply. And almost everyone we speak to who's involved in this sector says that instead of killing off the ESG world, COVID-19 is actually giving a renewed sense of urgency to it for all kinds of reasons that we're going to talk about now. And that raises a lot of questions for anybody who's watching, who's in the corporate world or the financial markets about what that means. Do we agree about how we take this agenda forward in the back of COVID-19 and what the top priorities should be? Is it going to be the same in America as it is in Europe or elsewhere? Does it involve collaborating with government or going alone? And how exactly can we actually build a proper agenda that's going to win wider public trust? And I highlight that last point because I took part in an event earlier this week with Oxford Saïd Business School and asked the audience to vote on whether they thought they trusted business before COVID-19 and how that might change. And only about 6 or 7% of the audience said they had a high level of trust in business before COVID-19. But 75% said that business would face increased pressure to act in a socially responsible way. Separate quick data point, the Edelman Public Relations Group does a regular survey of companies and public attitudes, and that showed about 2 weeks ago that trust in business has fallen quite sharply this year to levels below trust in government. So we have some contradictory threads, but some very interesting developments. And we have a terrific panel to talk about these themes. Matt Christensen, who is Head of Global Responsible Investment at AXA. Alexandra Palt, who's Executive Vice President and Chief Corporate Responsibility Officer at L'Oreal. And John Elkington, who's an author and co-founder of Volans Venture. So a combination of business and financial perspectives. But maybe I can start with you, Alexandra, and ask you, do you think that COVID-19 has made the ESG issues more or less relevant for L'Oreal? And if you think it's made it more relevant, what exactly are you doing about it?
Well, thank you very much, Gillian, for the introduction, and thank you very much for inviting me to be with you this evening. First of all, I would say I don't want to call it ESG issues. this is not the way we talk about it because it is really part of strategic transformation. We are going through a business model transformation. So we don't call that ESG, we call that our sustainable transformation. And of course, so I do not position it outside. And I think this is very important because this is also what made us succeed, I think, during this crisis, to not just keep the issues on the agenda, but to make them much more important. So first of all, of course, I want to say we are in the middle of a transformation. I'm not at all saying that we have achieved it. We are not perfect. There are a lot of things we have to do. But what we have succeeded during this crisis, and what was very interesting, is that we have prepared for this transformation the last 7 years. We had our first targets declared in 2013. And honestly, when the crisis started and the lockdown started, I was very destabilized because even if I'm sitting on the executive committee, and I think that's also a sign of how serious the issue is for L'Oréal, I thought, well, what is going to happen now? How I'm going to position, how can I push my issues at the same time when there is everywhere people are going there's going to be a lot of unemployment and so on. So I was worried, and actually what happened is that we have started to transform our culture. And so what happened at L'Oréal, I think through also this cultural transformation we have led in the last years, is that from the CEO to the whole executive committee and all the teams, so this is not at all one person merit, it is really a team spirit. The first thing, 2 days after the lockdown, we made a plan for all our stakeholders that could be impacted by the crisis, meaning our suppliers that we gave instant payment, our clients, hairdressers, small pharmacies, to which we gave longer delays. We all transformed all our factories, 70% of our factories in the world, to produce hand sanitizers and donate 14 million units until now. We gave to vulnerable communities, and this went throughout the crisis. So at every step of the crisis, L'Oréal got one step further. So we announced last week, as we are now getting out of the sanitary crisis and getting into a very deep social crisis, and I think this is really important to mention, it's not just an economic crisis, there are hundreds of thousands of people getting into poverty. And so we announced last week a plan, L'Oréal for the Future, where we put 150 million euros. 50 of those 150 are going to philanthropic donations for women who are strongly impacted by COVID, the consequences of the COVID crisis, and 100 million are going to environmental impact investing. And I think this is a next step. And you can still say, of course, we have to do more. This is not instead of the internal business transformation, it is adding to the business transformation. And I think these very fast decisions by our board, our executive committee, were possible because we are working for years now on introducing these issues on the agenda of everybody and in the heart of the business. And so there's still a lot of work ahead of us, but for us, it was a moment where we could reveal our capacity to act according to our values and what we say. And I see that. I'm also quite optimistic. That's because I see also other companies act like this. And then, of course, I agree that unfortunately, some of them are just speaking and not yet leading what they say. And so I think we are at an interesting moment of history.
Thank you very much indeed, Alexandra. There's a lot of things I'd like to pick up on in a moment. I'm particularly interested, for example, to talk about what L'Oréal is doing about its supply chains, but I'll come back to that in a second, because I'd like to bring Matt in and ask, for a big financial company like yours, do you have the bandwidth or the luxury of being able to focus on ESG issues, or is it too much pressure right now, given what's happening with the markets and the outlook?
Thank you, Gillian. Great to be here with all of you. I think that, if anything, this crisis will continue to put more attention to the need for all investors to be thinking through sustainability, whether it be from the ESG risk perspective all the way to positive outcomes in impact investing. If I take the perspective from AXA Investment Managers, it's been 20 years that there's been work in this area, starting with social issues. Since this is a crisis, it's raised a lot of questions about social issues. Human capital was kind of a first area that we looked at years and years ago. And if you take the company, if I just speak about where we're at as an institution, so we have 800 billion euros of assets under management, so pretty big size in terms of the AUMs that you referred to about being global. And if you think about the open-ended funds, 86% of the open-ended funds that we have are already ESG integrated. So it means that regardless of a crisis, it's not about saying, oh, okay, we have a major crisis now, we don't have time to do ESG. It's already been years ago now bought into, this is just a better way to do asset management. And so ESG in our firm really started with an idea of a risk culture. And that risk management culture allowed it to really prosper and be spread over the different investment teams, which could cover fixed income, public equities, and even into the alternatives. And so the first part of what I'd say is, to some degree, business as usual on ESG. This crisis does not change that. But I will add something that is an outcome of what we're going through with COVID-19. And it was really to think through a bit more deeply about the impact investment side, which was to say, where we have started to create impact investment products, which we've done that in green bonds, we've done that with some public equity funds, and we started with private equity. We decided as a part of having a positive reaction to COVID-19 to say that not every problem that we face has an investable solution behind it. And we are an actor in society and have to think about what is our role as a financial services actor in society. Well, part of that is managing our ESG risks. Part of that is thinking through how we can look at social environmental impacts. And part of that is to think through where can we direct and channel money towards philanthropy that might be linked to our mission-related investing. And so what I mean by that is we launched a few weeks ago, and this was about something we've been thinking through, and we thought this is the time to do it, an idea around any impact investment fund that we will have in our company, 5% of the fees go to foundations and charities. And I think we're probably the first investment house where I've seen that that's been done across an investment palette, not just one fund, but anything that's going to be an impact investment fund. That's roughly 1 billion euros right now. And so we have a good chunk that's now going into already the first foundation that's going to receive money is the Access to Medicines Foundation, which some of you might know. John, you might know this one. And that's really about how to ensure that pharma reaches those who don't usually have access, and how to really position the pharmaceutical sector as a source of solutions. And that's something we really deeply believe in. And so we're putting 500,000 euros towards that. But we're also going to have, over the years that come, a philanthropy initiative that looks at where we have impact investment funds on gender, on climate change. I mentioned the one on health. How can we find the right types of organizations that are charitable that we can actually link to and promote and give financial support to? And I view that that's a way to actually start to say, what is changing that's positive coming out of COVID-19 that financial services actors can start to think about that might be part of that evolution, and what's our role in society?
That's a very interesting point, because I must say, in the excitement about impact investing and ESG, there has been a tendency to assume that, you know, financial markets and the private sector can solve almost anything if they have the right incentives. And I'm curious, do you think the need to clarify the areas where markets and private sector interests cannot work is actually quite important now? Because, you know, things always go in pendulum swings, but you know, there's almost been a sort of less focus on charity, if you like, or philanthropy recently than other forms of impact investing.
So now you're giving a question that can open up to all sorts of discussions. Part of that is what Paul and you said earlier around social issues. So I do think there is a role for thinking through where are public-private partnerships necessary, first loan guarantee, loss-oriented approaches that we see in the impact investment world. We've done some of that with the Gates Foundation. And there's also a role to say that some of this is systemic, and we need to have technical capacity support that goes beyond the range of an investment solution. And we can think about what might be the role of either the public services like government or multilateral bodies, UN, IFC, et cetera, that might be playing a role there. There's lots of areas on the chain that we have to think through over time. Where's the best fit for trying to find solutions that require different types of innovation? Some of that pure investment, some of that a mix between public-private and some of that just pure charity.
Right, right. Well, that's fascinating. Well, John, I'd like to bring you in here because, you know, you've been involved in this sector now for a very long time. In fact, I think you were once, you know, described as a dean of the corporate responsibility world. And I'm curious, your official title at Volans is not just co-founder, but chief pollinator, whatever that might be. I'd be curious to ask you to explain that. But as someone who's watched this whole world evolve, how do you read the current COVID-19 moment?
Yeah, thank you, Gillian. And just a very quick thank you to Paul for the Conduit Club, because I think the Conduit has been an extraordinary anchor for a very wide-ranging set of conversations around these sorts of issues. And Gillian, to you for the Moral Money platform. And I know neither of those things were easy to set up, but they're actually, I think, indications of the way in which this change agenda is mainstreaming. So firstly, thank you. You ask about chief pollinator. When that title was sort of given to me a couple of years ago, one of your colleagues, Lucy Kellaway, did a piece in the FT describing, I think it was a Guffipedia. And so it was about sort of really weird job titles that people were taking on. So I was not exactly celebrated, certainly spotlighted in there. But to me, it's a bit like the Conduit. It's a bit like your Moral Money platform. What we've got to do now is start to cross-link between very different aspects of the change movements, the change industry that are very often operating in silos. So I personally think this is one of the most exciting time of my entire working life. I'm 70, I was 70 last year, and I see a lot of colleagues now as boomers saying, we're going to retire. We tried to do the environmental right thing, didn't work, now over to younger generations. I think the next 10 to 15 years are absolutely crucial. And in terms of what COVID-19 has done for us, a number of us have talked for years about the need to switch from incremental change as a focus to systemic change. And you look at what the COVID-19 pandemic has done. It's been like an X-ray of the global economy. It's shown up transparency in China, but throughout supply chains. Who knew that supply chains were quite as fragile as they've turned out sometimes to be? We got the wealth divides and all sorts of different geographies suddenly being spotlighted in ways that people didn't imagine. Tax. I mean, suddenly people who thought they could get away with operating from tax havens and then get government support are finding that they're unable to do that. And then finally, just the intergenerational equity issue. COVID-19 is hitting younger people significantly harder than it's hitting older people. I'll put aside the death rates just for the moment. And I think that intergenerational equity theme has been central to the sustainable development agenda since the 1980s, but has been conveniently forgotten by many corporate embracers of the sustainability agenda.
Right. Well, thank you, John. I mean, I'm curious. I mean, last year, I say in the first few months of Moral Money, it really was mostly about out of ESG. The environmental issues dominated the headlines, partly because of people like Greta Thunberg, partly because of natural disasters, also because, you know, they're so much easier to measure and to quantify for companies and investors. We're now moving towards more focus on the S, the social aspects of ESG. But do you think it's possible to get agreement about what they should be and to measure them at all? I'd like to ask maybe, you know, for a perspective from L'Oreal, because I'm very curious about what L'Oreal's doing with its supply chains, because that's emerging as one of the S factors.
Yeah, well, I think this is one of the oldest commitments at L'Oreal, which already in the years, the end of the 90s, beginning of 2000s, we were early goers on the social auditing part and so on. So, but what we did is we took it a step further. So we have a very, very solid policy related to ESG evaluation of our suppliers. So you cannot work with L'Oreal if you do not have a very solid policy on climate and social issues within your own value chain as a supplier. What is this? We have 5 criteria of evaluation of a supplier, which is innovation, business, and so on. And ESG criteria is one of the 5 criteria of evaluation and has the same value as the others. So this is not something you can, as a buyer, not as a purchaser, not look into it. But at the same time, we also try, of course, to not just make it something that is a weight on our suppliers, but we also try to bring them on board. So we have a lot of training programs for them. They are working with us on CDPs, on carbon reporting. We help them through e-learnings. We bring them together to really try to make out of our logic of partnerships with our suppliers an added value. And that goes very fast because we also encourage all our strategic suppliers to engage with us in inclusive sourcing and inclusive value chain projects in order to bring more social values also to our tier 2 and tier 3 suppliers. So this is a very, very strong commitment at L'Oreal. But I think that we have a quite, I might say that because to get also out a little bit of L'Oreal and say more things that can be valid for other companies. I think that when you look, as Paul asked the question of what is leading to change, of course it's consumer behavior that is leading to change. It is, but it is also rules. So I think this is an important lesson for Europe, and it's an important lesson for everybody that we need rules. There has to be a legal framework, and so that all the due diligence discussion at the European level is an important one that has to be supported, because this is one of the elements that brings change. So it's not the only element, but I think it is dangerous to be all against legislation, all against rules, which is a little bit a tradition in the corporate and economic sector. So I think this is not serving anybody. It's not serving us, it's not serving the communities, neither the consumer, not our businesses, and definitely not society. So I think we have to be, we have to get out of this logic. And in France and in Europe, there are clearer rules which help and which have to be supported.
Right. I'm going to cover the rules issue in a moment. Before I do, though, I'm curious because I heard that L'Oreal had, I mean, even in this crisis, for example, committed to pay your suppliers on the first possible day rather than waiting traditionally to pay suppliers as part of the S factor in dealing with COVID-19. Is that correct?
Yes, that's correct.
Right. I mean, is that the kind of measure you think that companies, could and should be doing? Because that's very unusual across the corporate world as a whole.
Yeah, so of course, I think that we did it because we all think that this was needed to be done. Because our suppliers, of course, for our huge, we also have very huge suppliers. They are bigger than us sometimes, This is not the people we are talking about, but we are talking about people who need immediate payment in order to keep treasury, in order to keep salaries paid, and so on. So I think it was very thoughtful because there were different people involved, of course, in the elaboration of this solidarity plan. And it was very thoughtful to pay our suppliers on an instant day, because normally you wait 30 or 45 days. But during this crisis, treasury, you say in English, I think was one of one of the issues. But what we also did is for those who were our clients, like hairdressers or small pharmacies, to them we said, okay, you can pay later because they have the same issue. And I think that our capacity to respond to the different issues that different stakeholders face is related to the way we see our role in society and the way we should behave. And I think this expressed very clearly during this crisis.
Right, that's fascinating. I mean, because someone like you, by the way, I should say we are getting some great questions coming through. So do please ask some more questions if you have got things that you're curious about, and I'll get to those in just a moment. But Matt, from the perspective of somebody like you at AXA, who is used to evaluating companies, how on earth do you measure that S factor, i.e. the social factor? I mean, because, do you have ways of looking and seeing whether a company is trying to treat its suppliers and its clients fairly or not? I mean, do you have any systematically consistent way of tracking these kind of issues?
So I'll apologize in advance if you hear any noise. It's 8 o'clock in Paris, so everybody in my family is out clapping and hollering and playing the drums right now to support the medical profession in this country. So actually, we have for some years brought in social criteria into our ESG integrated efforts. That would be in our scoring. That would also be in some of the key performance indicators. Let me just give some highlights about what that means. So part of what we're looking at on the social side is certainly what you've just addressed, which is supply chain management and understanding what is the relationship to suppliers and how are the policies being done by corporations in terms of the monitoring of that, how much of that is both outsourced and monitored at that subcontractor level. So we have a whole bunch of data that we receive that looks at that. We're also looking at human capital management. That involves career training, mobility. It's also about, is it hiring and firing, or where there's going to be a change in companies in terms of their shifting strategies? How are they trying to find responsible ways to deal with human resource matters? So these are all things that actually data is available that we can look at. And then the other thing I would mention is one of the areas we do look at, and this does start to get into specific jurisdictions where it's really relevant, is just CEO pay, and trying to think of that as a context of looking at what is the pay gap between if we think about the median employee versus the top level of companies, and of course we see some egregious examples, we do tend to link some of this to our voting exercise, right? So when it comes to the voting, we're pretty active in the way that we think through strategic voting, and we have a very healthy dissension rate. If you look at the putting the means between the engagement work we do, the ESG assessments we make in terms of portfolio construction, but then the expression of that view in terms of our vote when we're not happy with things, even if we're still a member or a owner of the capital of certain companies. And so all those aspects are part of what we look at when it comes to the S. Now, the one thing I will say that I would love to see is better data coming out of the social area. There's been a lot of work, as you pointed out to earlier, about climate change. One of the things that we're still missing, I'll just give one example. We would love to have more information about gender gap in terms of pay. The UK has been pretty good about that recently. In terms of looking at the context of female representation on management teams, we can get it now pretty much on boards, but not so much on the management side very easily. Those are still gaps in data that we're doing a lot of lobbying to push through both corporate disclosure with public policy players also to ask for that and make it a level playing field so that across jurisdictions we can have better access to that information.
Right. And in terms of things like the, lobbying on the, companies and things, and using your incredibly, sometimes, large muscle as a shareholder, how are you finding the current round of, virtual AGMs, Zoom AGMs? Are you still managing to put the pressure on companies right now during COVID?
So one of the things that we have tried to stress is that the idea of virtual AGMs doesn't have to be a disaster, but we wouldn't want to see that it's permanent. And the other piece is to say that if we're going to have virtual AGMs, there has to be a very good provision for the ability for shareholders to express their views, and especially minority shareholders. That's where we see some of the challenges right now, is that trying to ensure that we can still participate effectively in a virtual context. This has all happened very quickly, and I think that that's part of the learning pathway that we're all on, both in a constructive dialogue with corporations as well as where we have to be more active to actually say, hey, this is too fast, or this is not allowing us to express our view as we might have if we'd been able to physically be present.
Right. Well, I must say, we've certainly seen some stories of, some of the nuns who are campaigning are very cross because they've been shut out of AGMs and they can't get their voices heard. There was a big showdown yesterday with the AGM at JP Morgan, which was quite dramatic, about environmental
I saw Jamie Dimon in the FT today made this beautiful sort of story about the future of sort of social issues and workers, et cetera. It made I think I have it right here. It's like page 4 or 5. So he was able to
Well,
get a
we
nice quote in
also,
the FT.
yeah. Well, you should look at the Moral Money newsletter as well, because we also highlighted the Moral Money newsletter, the other side of what happened yesterday, which was slightly different, because there was also, so again, another reason for any of you who are watching to click onto the Moral Money newsletter or sign up for it, because we highlighted the bitter fight about the environmental issues and the different path that JP Morgan's taken in relation to, say, Morgan Stanley or Bank of America on the climate disclosure questions. So, yeah, and there's both good and bad coming out of big companies right now. But
Yes.
John, you know, when you look at this moment in history, I mean, what do you think are the top priorities that you'd like to see companies or investors actually addressing? I mean, is there a checklist in your mind about what needs to be actually done right now?
Well, there is some sort of checklist. We've just recently finished a project with the World Business Council for Sustainable Development. 10 years ago, they did a project called Vision 2050, where they looked out to the middle of the century and tried to get a sense of what the change agenda for business would look like over that sort of timescale. Well, they've done a refresh of that, and we've been very much part of that. And of the 10 critical mega trends, pandemics, this was done before COVID-19, but pandemics came number 2. Number 1 was fragilities, vulnerabilities in the financial markets. So, and everything else fed into that. And what's really interesting at the moment is so many of these different issues are starting to combine. We also then did a special study on COVID-19 itself, and that was launched last week. But to the earlier question around the social side of all of this, you know, when 25 years ago, I came up with the idea of the triple bottom line, the social component, so economic, social, and environmental, the social bit was the one that was really agitating for people in business. So this has been difficult to deal with for a very long time. I remember Walmart, for example, saying, well, we can do the financial piece. We were also asking them to think about economic impact, and we can do the environmental stuff, because even then that was beginning to be a bit more measurable. And it became much more measurable when Lee Scott, as the CEO, really stepped up after the Hurricane Katrina disaster. But the social piece, well, of course, I mean, it's like Amazon, they really struggle with. And if I'm sort of looking out to the next sort of 3 to 5 years for business, and I think various other panelists have already referenced this, the social piece is going to be central, absolutely no question. And climate change and so on have their very strong social dimensions. And the United States has really shown the divide here, where on one hand you have Mark Benioff, for example, CEO of Salesforce, saying more or less what the FT is saying, that capitalism is overdue for a reset, it's broken in some senses. And Warren Buffett saying, may be true, but only government can resolve that. So individual companies acting on their own can't do that. So I think how we help government reshape markets is the central question increasingly for businesses. Most of them aren't up to that yet. They're not even beginning to think about that, but I think they're going to have to.
Well, as you say, that is indeed going to be very much the big issue going forward. But, you know, the minute you say the word government, it tends to spark intense controversy in the C-suite or in investment committees, and a rather different flavour on different sides of the Atlantic. I mean, do any of you have any thoughts on that, about how to reconcile that, or is that just a debate we haven't even really started to have yet?
I'm happy to have a very quick go. I mean, about 15 years ago, we started to look at corporate lobbying, because you had companies coming out with their sustainability, non-financial, pre-financial, call them what we will, reports. At the same time, you had them lobbying behind the scenes to get government to do things that are often cut across what they were promising in their transparency and reporting activities. That is less of a problem now than it once would have been, partly because you've got a lot more people looking at that. But then, exactly as you say, not surprisingly, this is political, and it divides boards, divides C-suites, you know, even on the same side of the Atlantic. But I genuinely think this is something that if business does not properly address this, most of what it's doing on other fronts will be swept away. And I'm not in that saying government is perfect. We really need to re-engineer government for the new era. There's a platform based in London called Apolitical, who do the sort of sharing of best practice across the public service sector. globally. We need a lot more of that. So I'm not saying government must wade in. Government must improve as it wades in, and business needs to support those sorts of interventions.
Maybe I can just add something on this. I do think that, you know, I hold passports to both the US market and the European market. And one of the things I will say about this idea of social issues and regulation, and therefore the behavior of companies, investors, and other civil society actors, I do think that the government has a role to play to create the standards. So I would say that although it can be burdensome, what I see the EU doing around the sustainability framing, it started with a lot of taxonomy towards the environment. They've been pushed to think through how to have disclosure law best oriented towards all ESG, including social issues. And the other thing I would say is that it's really incumbent upon ourselves to hold both the investment community to account, so ourselves as investors, and equally towards the companies where we invest, to say, when we see corporations that have signed up to the Business Roundtable and the beautiful statement that was done in the US, how are they living it afterwards? How is it consistent in terms of the actions that are being taken? Just to use one area that I have definitely seen some discrepancy at times. And so I think that between setting the standards at a certain level of which I think we can say it's not going to happen as fast in the US, if at all. It's still going to be more about private sector initiatives, from what I can tell, certainly at the federal level. But that is a role to then help the civil society to move in a way that moves and captures all the different areas, especially free riders. And that's part of the problem often if we don't have some sort of regulatory framework.
We have a lot of great questions coming through. Patricia, give us your thoughts, and then I'm going to go to the questions. Sorry, Alexandra, sorry.
Can you hear me?
Yes, Alexandra, yes.
I have some problems with the noise. Yeah, so I just wanted to add on the question. So I think definitely there is one actor in society we are not talking sufficiently for me about is civil society. So I do not think that this conversation is just happening between companies and government, and I think it should not happen just between the two of us, because this would not probably lead exactly where we wanted to go. And I think this is actually something very interesting that happened throughout the COVID crisis, that in a lot of countries, the cooperation, the collaboration between public, civil society, and companies led to a very quick response to a lot of issues during the sanitary crisis. And I think this is an opportunity we have to build on. I can't say exactly how, but it's definitely something that I think it is important. So I think this is an important point. And the second one is that perhaps the pressure we can put on companies, it's true, tell them to interfere in, or not to interfere, but to have even a positive role in the shaping of the new rules is not going the most easiest thing for companies to do. But we can definitely do two things, I think. Well, first, be courageous and sometimes not accept because very often the industry association or the employers boards, they are going to the lowest level of common ground. And that is definitely something which we should not accept anymore, and where we should push the representative institutions. And the second one is, of course, to lead by example. So I think there are two elements what companies can also do without going all the way if they cannot, but we definitely need what society is not accepting anymore is incoherence. Incoherence between what we say, what we do, and what we do on the non-official part. And I think we all have to completely align on the three parts.
Right, right. Can you all hear me with
There's
my...
a problem and sound.
Okay.
That's better.
Okay, is that better?
That's better.
Okay, I'm sorry about that. Apologies. Well, we got some fantastic questions from the audience. And so I'd like to start with one which is linked directly to what we've just discussed, which is, do you think that to help government reshape markets, more private sector leaders should hold advisory roles?
Do you think that's advisory to government or different?
Advisory to government, yes, I presume.
Well, my own view would be absolutely, but it should be as transparent as it possibly can be. And wherever possible, they should do it in concert with other people from business rather than taking partisan interests in. But yeah, absolutely, I'd certainly back that.
Do you have any thoughts, Matt or Alexandra?
Yes, I think where we can have private sector being involved and bringing in some pragmatic real life experience in terms of what has worked, what has not worked, and also to have an exchange of ideas to better understand, there's still a gap between these different reference points. And so I often find myself trying to play a bridge in some of the discussions because our area of sustainability often touches so many different types of actors. And I think the more that private sector people can have some role of giving counsel on if it's going to be on the pharma, what's a pharma health executive going to help with a public health person in the government, and just about trying to find ways to make that work better with experience. But again, to not be a lobbying activity, make it very clear this is about solution orientation, not lobbying orientation.
Right. Got a question, maybe Alexandra, you can address that, or I have another question to ask you if you would prefer.
No, go ahead. Another question so that everybody can have an answer.
If you were starting your CSR program now as a company, what is it important to know and what advice can you offer?
So first of all, I think it depends very much where of course where you are in the organization on the advice, because it's change management. And so what I have found out at L'Oreal is that I really actioned all the levers of change that you can use in change management. That meaning highest level vision, meaning getting the right people on board, having a vision that employees are involved in. And of course, I think that if you're a corporate responsibility officer, you have always to have the courage to stretch a little bit more than the organization is actually ready for, but not to be completely out of what people can understand. Because if you're on the other, if you're somewhere where people cannot even follow what you think is needed, then you cannot lead change either. So I think very much get inspired by how to lead change in any other situation, and then there of course there are a lot of cultural differences. I get aware when I listen to you, because if you say in France that you get a CEO on the table of politics to influence public policy shaping, this is committing suicide, so there is a little bit also of cultural differences that have to be taken into account.
Absolutely. And if either of you want to jump in, I wanted to ask, there are a lot of questions asked by the audience about how you measure the social issues again. So I'd like to come back to Matt. And people are asking, what are the key KPIs for the social factors? How do you actually, track this? There's a question about whether you think it's correct to separate social and environmental factors. Shouldn't they be put together? Matt, do you have any views on this?
I think in general, what we've learned with ESG is they all eventually link, and then it's about how do we best deal with them and figure out ways. So I'll give an example. We think about women on boards, that's governance and social, right? If we think about climate refugees, that's going to become social quite quickly. And so they all tend to link, but we need to try and figure out ways to discreetly tackle these to make them manageable. Part of the challenge is to make them manageable. I'll give you some examples of what we're doing. There's a big trend right now of COVID bonds, right? So social bonds is one of these areas that has received a fair amount of press about what can we do from a fixed income, very large asset class area. So when we think about a social bond, for example, or even a more COVID-oriented bond and the KPIs around it, what we're looking to do is to think through, okay, what could the use of proceeds be put towards that we can measure? So for example, we look to measure, will the bond help to push further number of vaccines or access to populations that are not always served effectively? So that would be a little bit of what we do on a pharma type of approach. If we think about it more around, let's say, financial institutions, we're going to be looking on a social basis of how did we get more loans provided? How did we look at whether there was more job growth or jobs preserved? So these are the types of ways that we can look and ask issuers to create metrics that we can follow as investors.
Right, right. Fascinating. Right, I've got questions for each of you separately. I'm going to ping them to each of you so I can get through as many as possible. Alexandra, I wondered if you could expand on L'Oréal's recent announcement of a 50 million euro commitment to preventing climate change and supporting the circular economy. Is this through traditional grant making or through impact investing? Can you provide tangible examples of how L'Oréal will put these funds to work? And then separately, there's also a question about what L'Oréal is doing to support the voice of women during the COVID-19 crisis, because it's been pointed out that these are often not being highlighted in the public policy debate right now.
Yeah, so perhaps I start with the gender and women issue. As you might know, this is really one of the historic and very strong commitments of L'Oréal. We have the For Women in Science program, so we have a very strong gender policy internally. So what we did during the COVID crisis was we supported organizations that were fighting violence against women. I don't know how the numbers are in the UK, but in France there were 30% more of intimate partner violence. So we did two things: supporting our partners, who we work normally through financial funding in order to create shelters. But also we supported a campaign which was done with the help of one of the big women's networks against gender violence in France, in order to give the available number and strategies to alert to more women. It was a social media campaign. And we also allowed our employees through our volunteering platform to contribute either financially or through making their competencies available. Now, after the crisis, we are going to give a 50 million philanthropic donation to civil society organizations. What we have experienced during the crisis was that the small civil society organizations, community organizations on the ground were very effective. So we definitely want to support them because they are in danger. And I think if this civil society organizations disappear, it's a danger for everybody. So we really accompany them on those who are working on either women affected by gender violence, refugee women, women who are in poverty, so single mothers who were drawn into poverty through the crisis. So this is the 50 million donations on which we work. And the other part you were asking me about is the 100 million budget on impact investing. So 50 million of this budget are going into a fund that we are doing with Mirova, who is the impact investment branch of the group Natixis, with whom we are working on ecosystem restoration. So as you know, biodiversity loss is, well, we are going through the 6th mass extinction. The restoration of biodiversity could contribute to 30% of fighting climate change. So we think it is interesting to develop a model with Mirova around a financial model that is allowing to restore ecosystems, either forest or coastal ecosystems. The other 50 millions are going into also impact investing, but on circular economy. And the money is not yet bound as with Mirova. We are looking into, should we create another fund, or should we invest ourselves in projects, or how we are going to structure the 50 million on the circular economy.
Right, right. John, got a question for you about regulations. What regulatory change would you like to see, and what systemic change would you like to see? Blending two questions together.
Well, it's interesting. I mentioned the triple bottom line a moment ago, and intuitively, I decided to, a couple of years ago, recall that. And part of the reason was that it wasn't being used in a systemic way. And one of the things that we've concluded since then is that there are 3 stages of this change agenda that we're all involved in. And for the last 30 or 40 years, we've been largely thinking about responsibility. How can we make different actors in the economy, in society, more responsible? And that agenda just gets wider and wider all the time. So, you know, tax havens and these other things are all becoming part of that. But the word that you hear on everyone's lips now, who is in some sort of leadership position, it doesn't matter whether they're running cities or supply chains or major companies or whatever, is resilience. And it's very clear now that the systems that we've built, particularly during the period of globalization, the most recent one, are quite efficient in conventional terms, but actually not terribly resilient when it comes to some of these really big crises and disruptions that are coming at us. So I think we've got to expand the spotlight of everything that business in particular, but financial markets do as well, from the responsibility frame to resilience. But ultimately, the only way that you can get to properly resilient systems, whether they're economic, social, community, environmental, whatever, is by regenerating them, by investing them over the long term. And that's where I see certainly civil society has a critical role to play. And one of the really things that worries me at the moment is the way in which money is not going to NGOs and others as it once would have done. That's, I think, a structural problem for us all. But longer term, I think only if governments come in an informed and intelligent way can we restructure markets in the way that they need to be restructured. So in terms of regulation, it would have to flow from that. So it would have to do with transparency. It would have to do with the extent to which supply chains were genuinely sustainable over time. It's very difficult to think about how governments at the moment, national ones, can regulate global supply chains, but they can do, as Matt said earlier on, standard setting is a crucial area in all of this. And I think both the setting of standards and the policing of them around the world is going to become even more important over time.
Right. Well, it's interesting you mentioned regenerative issues, because in fact, we also had a question on that from people asking whether Alexandra and John, if this isn't the perfect moment for business to shift towards regenerative thinking and to show that regenerative is much about social as environmental issues. Is regenerative a word that you use internally, or does that sound a bit too scary and political for your sort of internal consumption at your companies?
So Alexandra, do you want to answer first? And then I'm very happy to answer.
Yeah, I think John is certainly has a better overview of what is happening around. So from our perspective, no, regenerative doesn't sound too ambitious. No, on the contrary, I think it sounds very aspirational. And as it sounds very aspirational, I'm very careful about greenwashing around this. Because it sounds great. Let's do regenerative and compensate all our carbon emissions since the beginning and whatever. So I think that sounds great. But I think we have to go in this direction, but I think we have to seriously tackle up issues before we can in any way claim that we are on the track of regenerative, other than what we do, of course, with the impact investing about the regeneration of impacts of ecosystems. Right.
So, Gillian, if I can now just very quickly respond. I think Alexandra had already mentioned L'Oréal's work on ecosystem restoration. That, in my mind, is very much in the regeneration space. Most people in business at the moment haven't even heard the word regeneration outside urban regeneration and things like this. But it's no accident. I've just done a book called Green Swans, and the subtitle is The Coming Boom in Regenerative Capitalism. And the reason it's there is because in the same way that sustainable capitalism would have sounded outlandish, weird, impossible 30 years ago, people have defined sustainability very often to suit themselves. It's what they can manage in a comfortable time frame with the resources that they happen to have. if you start to think about resilience and regeneration rather than responsibility, that takes you into a very different space. And it means you have to invest in systems that up to the moment we've sort of taken for granted, and at our own peril, I would argue.
Can I just add one thing from the investor view on this? It's the thematic of biodiversity is one that we put on as a strategic avenue to pursue about a year and a half ago. And part of the challenge, going back to the earlier question about social issues, is we're still pretty early in trying to figure out what data can we use when it comes to regeneration, what data can we use when it comes to biodiversity. In the French market, a number of us investors have come together as a collaborative endeavor to ask for data providers to start thinking through with us, what can we start to measure and how can we start to get this data? Because we've done some work looking at biodiversity in the context of everything from forestry, from carbon, and part of what we're putting forward as some provocative ideas is, do we need to eventually be pushing the market away from beef, for example, and thinking through how these different supply chains on food and agri can be completely modified to think through what is the world we want in the next 5 to 10 years when it comes to regeneration, whether it be urban planning, think about land use, and going back to the earlier question about how these connect between social and environmental factors.
Right. Well, sadly, almost we're out of time, but quick question to you, Matt, which I think is very relevant to today. How has the current crisis changed how AXA approaches healthcare from its insurance division to its various sustainability and impact investments? Where can AXA have the biggest impact?
So if you mean AXA Group, the insurance side, one of the things that they've continued to do is to promote the idea that when it comes to health, which is a key thematic along with biodiversity, as I mentioned, how do we think through the connection on what we're going to do around investing towards health solutions? And so on just keeping to the investment theme, we've done quite a bit of work on vaccine and looking at vaccine distribution around the world. We've also just done some recent investments on medical solutions and thinking through how that can be translated to the developing world as well with modified technology use. And so I view that as all part of a larger theme that we've been thinking about for a while, but COVID-19 has just made that even more present.
Right, right. And just one other quick one to sneak in. Does the panel think a global corporate tax for multinationals would be acceptable now?
Not to the corporations, but it doesn't mean that they couldn't be persuaded.
Either of you have a view on that? Because if not, I have one other quick question to ask.
The only thing I'll say is, rather than global, just ensuring that the fair tax is paid is a lot of where we come from at investor viewpoint. Already that's a lot of work.
And then Matt, while you are actually talking, is AXA encouraging its investee companies to support their SME supply chains partners in the way that Alexandra has described L'Oreal is doing? Will they accelerate funding to the major companies doing this? What are the challenges? Back to the question about how do you turn S, which sounds so intangible, into tangible actions?
So in terms of supply chains, one of the things that we do is we work with data provider to look at the rankings of the supply chains being used by companies in terms of the labeling that's been done, the policies, and the follow-up on the policies, because often you can see a policy that's been developed, but is there any follow-up and teeth to the use of that policy? Back to this idea of the policing. And so in terms of the supply chain side, depending on the sector, and some of these are extremely important to us, certainly manufacturing, that's an ongoing work that we do that enters into a lot of the engagements that we have with corporations. And so I view that as part of the ongoing concern that we have that we continue to put and think about how to go forward on.
Right, well, thank you. Well, sadly, we are pretty much out of time. And I had two quick things I wanted to touch on now. Firstly, those of you who've joined late, and some of you have asked questions saying, I came in late, I'm sorry to have missed half of this brilliant conversation, I want to hear it. Let me reassure you that there actually is going to be a recording posted on the Conduit website later on, so you can hear it all properly later on. Secondly, I had a question right at the beginning asking, why did we at the Financial Times call our project Moral Money, which touches into the big theme of what we've been discussing? And the honest answer is that we called it Moral Money because we were looking at a quick, easy tag and phrase that was catchy and could go viral and communicate to people who hated acronyms and who were fed up with the word sustainability. And we wanted something that would move with the times and change, because I could see 18 months ago that the market was still very nascent and growing up fast, and the boundaries were not clear cut. It was hard a year ago to predict how it would develop. So that's why we called it moral money. It's a very imperfect phrase, and we're certainly not meaning to sound pious or sanctimonious or religious. It's really instead trying to capture something else, which I think all the panelists have talked about, which is that people use the word impact investing. In some ways, it's actually a misnomer, because all investing has an impact. The question is whether it's a good impact or a bad impact, and whether you actually think about the impact. And I guess in some ways, that's been the general theme running through today's panel discussion. Because as John says, you know, this crisis, COVID-19, has been like an X-ray in terms of not just revealing with such terrible clarity the injustices, imbalances, and the many problems in the world today, but also spotlighting the companies which are trying to do something about this, and the governments which are pondering this, but also the ability of citizens to actually get engaged moving forward. And I suspect that in the future, that X-ray issue is going to become more and more important. So another way of putting this is that, you know, in retrospect, if I was to rename moral money now, I might call it consequence-based capitalism, or consequence capitalism, which is a horrible phrase. That one is not going to go viral or be catchy or easy to remember, so we're going to stick with moral money. But it does really reflect the key theme that all of you have been talking about today. We're still at an early stage of the COVID-19 crisis, I suspect. There's still a lot to play for. But I'd just like to say thank you to all of you for your very thoughtful comments. Thank you to the audience for being so extraordinarily engaged. I think about a quarter of you, actually more than that, asked questions, which shows a high level of passion for this topic. And I apologize to everyone whose question I wasn't able to get to. And I'd also like to say thank you to the Conduit for hosting this, which has been a great discussion in one of many great discussions you've had in your series. So best of luck to all of you in trying to work out what these issues mean and pushing the agenda forward. And now I'd just like to hand over the panel back to Paul to close us off. Thank you.
Thank you, Gillian. Thank you.
Thank you. I believe Paul is coming back on again to...
I think we've lost Paul, so you get me, Emmanuel, instead. But a big thank you to all our speakers and to Gillian for facilitating tonight's conversation. A fantastic level of engagement. So I think this will continue online on the Conduit Forum and also back in the building once we're open. So without further ado, I'd like to wish you all a lovely evening and have a lovely rest of your day.